Hi all, this is Dr. J at 11, streaming live from Long Island, New York, where the weather is still cold, but it's less windy than it was earlier in the day. Hopefully tomorrow it will be a big, beautiful day in the month of March. It's hard to believe how time is flying. It's already the end of March, the beginning of spring. Spring has sprung, but it doesn't feel it. So officially, we're in spring. Unofficially, we're in winter. Officially, the market had a bad day on Friday. Unofficially, is it the beginning of a crash? Well, eventually, we're going to get that huge correction, 20 to 40%. Yeah, but it's not happening yet. I know. When you have the cross of the 3 month with the 10-year Treasury yield, Treasury bond, that is indicative of a recession. I told you that myself. But it could be anywhere from 6 months to 2 years out. The stock market is credited for looking 6 months ahead. That would mean that we'd be in a recession 6 months from now. I don't believe that. Things are going along too well. The economy is really not bad. It's humming along. So unlikely we'll be in recession 6 months from now. So for that reason, I say correction, not crash. Well, there are other factors. The PMI is another piece of evidence of the slowdown in the economy. But that too is a leading indicator and will take time before we actually see that happening, that the manufacturing really slows and we actually are in a recession. My guess is a year. That means the crash should begin 6 months from now, according to my calculations, which would be April, May, June, July, August, September, end of September. That's perfect time for a stock market to crash. I don't trust late September, early October. So I think that will be good timing for the beginning of the bear market. I don't think we're in a bear market. I think we're still in the bull. And this will be yet one more correction before we make new all-time highs. It could be a bad correction. It could be similar to the correction that we suffered October 4th all the way down to December 24th. That was how many months? October, November, 2 months. I don't know if this one will last 2 months. I think it'll be shorter. I think it'll last maybe a month and will be no more than 10%, no more. 10% on 25,200. Well, where were we? 25,000. We actually broke 26,000. All right, let's say from 26,000, 10% is 2,600. Ooh, that's nasty. That's 23.4. I don't think it'll even be that much. I think it'll be more like in the 24,000 range. So I'm not that worried. If when we get down there, it goes below that, then I'll worry. In the meanwhile, I'm going to still get lean and mean because even a 10% correction, if that's what it is, gives you opportunities to fiddle around with your portfolio, get rid of some weak stuff, and adjust. Maybe decrease your overall equity position a little bit, go into better quality stuff, go into defensive names like Costco, what else? Dollar stores, those kind of things. What else can you do? You could actually write some calls, but it doesn't give you tremendous protection, because the call, if you get a premium of $4 and it goes down $10, it cuts your loss almost in half, but you still got to pay the loss. Puts are expensive protection. So I think the best thing to do is either what I said in my previous video, if you're nimble enough, like a nimble Norman, you play things like the TWM, QID, what is it, QIDs for the Qs, etc. You play the 2 times, 3 times instruments, short, ultra short type instruments on the ETF, on the ultra short ETFs that that short the indices. You could do that if you're nimble enough. And the other thing you could do is, what else? Well, I said already, decrease your position and then look to buy back cheaper. Or you do nothing, you just sit it out, because I don't believe it's good, the beginning of the end. So you just sit it out. That's probably the easiest thing to do. Watch it. Don't invest anymore at this point. Probably not a good idea to go into too many different things, new stocks, because most will fall when the market corrects. And I feel that this is more than a one-day aberration. I think we'll see high volatility and further declines before this is over. It might take a week, 2 weeks, even a month. I don't see 2 months, but it's possible. If it takes 2 months, that'll put us till the end of May, and then we will see a super big bang, super duper summer rally like you've never seen, and then the collapse of the market. That's possible. If it does go down 20%, we're looking at 23,000 and change. To get to 30,000, you need a lot of juice. You need a 30. What do you need? A 40% gain, something like that. Almost 30%. 30% would be 7,000. Yeah, 7%. Yeah, that's what you need. You need you need a 30% move back up. So, all right. So let's not worry about this. Okay. Let's look at the charts. Just be a little cautious. Let's not over worry. I don't think it's the beginning of the end. We're going to look at requests, AMD, AMRH, and the Dow Jones Industrial Average, which I wanted to do, and when I got cut off on my last video earlier in the evening. The quality seems much better now. So let's get to the video charts. As always, do your own due diligence. My opinions are strictly my own and do not constitute investment advice. Please subscribe to this channel. Tell your friends about me. Share the link. Write comments. Look and read the comments, because some people have really good ideas other than me. I'm not the only one with good ideas. Let's take a look at the video charts. Okay, I have no video charts, so let's quickly do it. Maybe it's better this way, just let the computer do its work for me. So we want to look at the Dow first. Quickly load that Dow in. See how nice it is? It's when a computer responds, when the bandwidth is good, when Verizon modem doesn't go down on me. Much better. It's a pleasure. Okay, so what have we got? We've got 1, 2, 3, 4 days of a downslide. So this was Friday. No, Friday was actually Thursday was actually an up day. It was an positive engulfing, a bullish engulfing, but not at the bottom of a downslide. So I basically threw that out. And what we got on Friday was a very big red candle that can't be eliminated. It has to be respected, that big red candle. So we have the range was from 25.5 to 25.877, 377-point range for a total loss of 1.77%. That's significant. Not as significant as the rut, but it's significant. So it stopped right at support, but I think on Monday you'll see an attempt to rally back to the 25,687 area, and then a collapse down to, let's say, 25,303, or maybe where the 50-day is at 25,297. That's probably where it stops, 25,300, something like that. So that's my feeling for Monday. Maybe a slowing of the decline with an attempt to rally, and maybe only shed 200 points on Monday, with the Dow declining the rest of the week even more, down to probably 24, this area, 24,886 by the end of the week. So I see it going down at least that much within 5 days. And that's significant. After that, you're probably looking at, well, I don't know, you could be looking at this area, the low of the day here, 24,244. That's probably a good number, right about in here for where it's going to stop. I mean, I don't think it retreats all the way back to the December 24th lows. I would very much doubt that. So maybe right about here, you could draw in a horizontal line or just realize 24,244. So it's looking to me like 24,244 is a good target for the Dow on the downside. I don't see it going up immediately, but when it does go up, I'm still sticking to my 30,000 on the Dow. Let's take a look at AMD, which was a request. Okay, AMD had a harami, a bearish harami on Friday after having a huge rally up. That's the only time I pay any attention to a bearish harami or any other kind of harami, after a very big move one way or the other. So it figures that it will give back some, maybe as much as a whole gain from March 8th, which is 2104. I'm going to call for that low, 2104, by the time it's all over. Not saying it by the end of the week, but by the time it's all over, I'm saying $21 is where we end up on AMD. Despite the fact that the fundamentals are very, very interesting, AMD has struck a deal with Google to do live streaming gaming. So, with its chips and Google's software and experience, could be a winner. But I don't know if that alone is enough to carry this stock forward. I see it giving back by the end of next week. Let's say it gives back all of the green candle yesterday, and let's say at least to the low here. So I'll draw another horizontal line, 25.32. At least a point, very likely more than that very likely gives back, could give back as much as get down to 23.77 is possible as well. So AMD, like most stocks that I see, I'm very bearish on in the short term. In the long term, that's another story. I think they all come back, and they all come back with a vengeance. All right, so let's look at AMRH, baby blue chip, and Mary Holdings, AMRH. All right, so if you draw in the trend line on this one, you see a nice upward trend line. Let's draw it. I'll draw it from here. Whoops, too much. Okay, that looks about right. Maybe a drop lower here. Too much. Okay, something like that. So we're right on this trend line, and depending how you draw the trend line, this might be even slightly higher. So as long as we're hugging this trend line, we're in good shape. I think we're going to get another run at the high here of 48 pennies. Despite the correction that I anticipate in the market, I think this is one of the few stocks that has a shot at bucking the downwards pressure. I think it could actually run up in a down market based on fundamentals, the possibility of doing a joint project with Google on cloud computing. That would propel it probably over $1 if that happens. Based on that possibility, I see it maintaining its value, maybe even try testing the 48-cent level again. I mean, on the other hand, it's entirely possible it falls with the market back down to this 35-cent level that it turned in on Friday. So it's all over the place. The low was 36 on Thursday. The high was 45. 9-cent range for a penny stock is pretty big. So we could see it bouncing around a lot of volatility in this stock, a lot of volatility in the market. I think you're going to see big numbers in the VIX and the TVIX. That's another way of playing this. You could play the volatility. You could buy the TVIX and hope for the volatility. In any event, you have to be somewhat careful going forward, in my opinion. So I kind of went over what I wanted to go over for the most part. I think the danger is that there is a possibility of this being the real thing, the beginning of the bear, or continuation of the bear, and that it is possible that it won't stop after 10%, but it'll continue below 20%, and that's more than we had the last time. In other words, it's possible this leg down could take us to the 21,000 level on the Dow, and then we get a bounce, and then we continue on down. In other words, the beginning of the true bear market, along with a recession 6 months from now. That is possible. I hope that you're hearing me well, because I'm seeing a little discrepancy with my lip movement and my words. So I hope that the video was good this time. This has been Dr. J, streaming live from Long Island, New York. Don't forget to subscribe, tell your friends about me. I want to say shalom, sayonara, au revoir, arrivederci, ciao. Good night, all.